Hi traders, Nathan Bray here from ACY Securities. Now on our Telegram channel, broadcast out live at the end of last week, we were looking at the fact that this US dollar had corrected all the way back towards the end of the financial year to really key levels, which could provide great trading opportunities if we get the setup. So what I want to do is take you through a number of those opportunities now to see how they're performing. Now, because we don't have a lot of data coming out on the US dollar this week, it's a bit quiet. So what I'm really focusing in on is watching this 10-year yield. It's a really simple trick to use when you're trying to gauge, will there be money flowing into this US dollar? So if you're getting a better yield, say up around 3.8%, up to 4%, remember it started the year at around 1.25, 1.5. If we still have that 10-year yield holding steady, then what do you need to buy a US Treasury bond for 10 years? You need US dollars. So that would be one of the elements I'm going to look at to see how long I'm going to stay in this US dollar. Will this strength continue? Let's go and take a look. This is the ACY live interactive trading feed on Telegram. These are the broadcasts that came out to you late last week, which I'll review for you right now. And you can see here we had one on the euro dollar. If I keep moving across, we have one on the New Zealand dollar and the Aussie dollar and the dollar yen. So I'm happy to go through all of those with you right now. So opening up my chart, we're looking at a daily, and these levels are coming out to you as price is reaching them or is already at those key levels. So this is the Aussie against the US dollar. Now, if we have a look, we can see that price had a Fibonacci retracement level on the daily, right in line with this 62% Fibonacci retracement level. It was also coinciding with the longer term downtrend and in line with daily and weekly resistance levels. So that there, we're looking for a failure underneath. The reversal pattern I'm also seeing on the candlesticks was in fact these tweezers here, where price refused to get above that 62 or daily resistance level. Now, since we broadcast that, we have seen a move down, as you can see there, of over 150 pips in a few days. Now, let's have a look at the euro dollar. So looking at this euro dollar, it looks very similar because we got this correction, as I mentioned, in this US dollar all the way up to weekly, and this is the euro dollar weekly chart, around 103.72. So once that support became resistance and is also coinciding with the 79% Fibonacci retracement level as well, we're looking for a failure. And as you can see here on a weekly chart, we're also getting a candlestick reversal pattern occurring as well. So if I move down to the daily on this euro dollar, from that level that was broadcast out live, we're already up about 170 plus pips in a few days. So you start to get an idea of why these key levels can be important and are worth having a look at. Let's finish off by looking the converse angle. So what we're seeing is weakness in the US dollar pulling back to key levels of either resistance or support. So now let's have a look at the dollar yen, and I'll move it to a weekly chart. So we're looking at everything equally. The difference is the dollar is in an uptrend here, and we had this big correction week. So we were looking to see if price was going to change the price structure by breaking below this major resistance level at 139.45. So as we saw, it tried to get below, but at the end of the week, it ended up holding above. So if I move this to a daily chart, you get a better picture. Price is really respecting this key level, and there is no change to the overall direction. So therefore, it provided us numerous opportunities to move up from that key level that was broadcast out. So far, we're up over 300 pips in a few days. Now, looking forward, now there's not a lot of news coming out, as I mentioned, but I'm looking at this New Zealand US dollar, which is coming out with an increase estimated about 75 basis points from the Bank of New Zealand. So what we're looking at from that central bank, this was the level we were looking at, very similar. So we're seeing price really respecting this resistance zone. In fact, this is on a daily chart. We couldn't get price above 62, but it was respecting this previous resistance level there of 61.58. So the level we're putting out is looking for failure underneath this resistance zone. So far, we have had price fail, but with the New Zealand Central Bank coming out and raising rates potentially tomorrow by 75 basis points, what I'll be looking for is seeing if price can rally on the back of that news temporarily and show us it's still respecting this resistance zone. So I'll be keeping an eye on that one tomorrow. Okay, traders, if you like what you're seeing here and you would like live access to our private Telegram channel, feel free to email me on the email address behind me, or just open your live account and you can request it. I'll get that invitation out to you. Good luck with your trading, everybody.